We're live. What up, Hyperchange? How's it going? Well, I want to do a quick live video, basically just reacting to Tesla's shareholder letter. If you want to follow along, in the description right below, I put a link to the shareholder letter if you want to check it out for yourself. This is hot off the press. If make sure if you can hear me okay, make sure if you could comment that would be awesome. But anyway, just kind of wanted to give my quick reaction of what the earnings were. I'm gonna make a much bigger video with all my charts tonight after the conference call, so if that's more your style, don't worry, I'm gonna post that too. But anyway, pull up the shareholder letter if you want. I'm just gonna go through the highlights, what I thought about the quarter, and yeah, let's get right into it. So my estimate was 6.5 billion in revenue, operating income of 29 million. They came in at about 6.3 billion in revenue with an operating loss of about 167 million. So a little bit worse than I was expecting, but the cash was actually a really good strong point. So the cash, I'll read you just through the highlights now. I'm starting at the top of the letter if you're following along. Cash and cash equivalents hit 5 billion. Remember, this was up from about 2.2 billion at the end of last quarter, but they raised 2.2 billion, and so they also added 600 million in terms of cash from operations. So I think this was the biggest highlight and most exciting part of the quarter was that Tesla's cash position went up. So even though their earnings were negative, they increased their cash pile. That may be a little bit confusing. Most of that is due to the fact that they sold about 8,000 more cars than they actually built in the quarter. So that allowed them to basically get a lot of cash for those. But I think I'm seeing a lot of people being really disappointed in the comments, but I mean, it is a little below what I was estimating, but I mean, I think the core business is really on track here. So heading into the quarter, I mean, Tesla over the previous 3 quarters, not this quarter, had operating income of positive 309 million. So even with this 167 million loss, if you look at the last 4 quarters, Tesla's GAAP operating income has been positive. And I think this is unbelievable. And if you actually look at the free cash flow, which was 600 million this quarter, and the free cash flow has been hugely positive to the tune of like hundreds of millions of dollars, almost like 500 or almost $1 billion in free cash flow. So, I mean, you know, I'm a longer term investor, and I realized when I put out my earnings preview video, like I'm a little, like I love covering the earnings and it's super important to cover the earnings, but if you're, you know, a longer term investor, you want to be thinking, you don't want to get too wrapped up in, you know, oh, this quarter was a little too soft, this quarter was a little too strong. Like, I think you have to take a step back and look at how the company's trajectory is improving. And the biggest thing with the trajectory here is over the past 4 quarters, positive operating income. Over the past 4 quarters, hugely positive free cash flow. So really excited about that. The stock is down on this news. I mean, it rallied heavily into the earnings. Now I'm looking, it's about down 10% to about 237 per share. So in terms of some highlights from the shareholder letter, auto gross margin was at 19% in spite of reductions to ASP and lower regulatory credit. So the automotive gross margin was actually a bright spot. They do say that they added a little section here for autopilot and fully self-driving features, which I think is really exciting. They want to start, and they say they're making progress towards stopping at stop signs and traffic lights. And this is something that I experienced in the fully self-driving demo at Autonomy Investor Day that I think is so cool. And that will really be a huge step forward for Tesla's autopilot software, because right now we know it's been on the highway, but the beta development mode has been actually reading, and the car I was in was reading stoplights, reading stop signs, reading speed limits, and that's going to slowly get rolled out to people who have the cars. So that's a really exciting improvement there. They're also working on that enhanced summon feature, which I know has been in the works for a while, but apparently that's hard to actually execute in reality. A tidbit that they did say about Model 3 is the average Model 3 ASP stayed at about $50,000. So I think that's really encouraging, because this was in many ways the first sort of normalized quarter. We got rid of all the early Model 3 orders. We got the international, you know, delivery hump out of the way. And now that things are normalizing, to see the average selling price of the Model 3 stay around 50,000, I think that's really really encouraging sign. They also say they want to they say that all their manufacturing equipment in Fremont has demonstrated capability to build 7,000 Model 3s per week, and they want to up that to 10,000 units per week by the end of 2019, which would be an annualized production rate of 500,000 cars, not including Model Y. Model S and X, they say that they're continuing to run that on a single shift schedule. So a nice bounce back there, but I still think there's a couple features and tech that are in the Model 3 that are not in the S and X that they need to roll in, and that will help accelerate Model S and X sales, which will really help the whole financial statement. Gigafactory Shanghai, I think, is a real bright spot. This is on track. They want to go, wow. And this, I didn't even realize this, in the last sentence of the Gigafactory Shanghai tidbit, they say, depending on the timing of the Gigafactory Shanghai ramp, we continue to target production of over 500 vehicles globally in the 12-month period ending June 30th, 2020. Is that right? Does that mean they want to build from June 30th, 2019 to June 30th, 2020, 500,000 cars, oh, globally. So, okay, so that's an interesting tidbit, not just Shanghai, but they've introduced a subtle new guidance here, which is saying very dependent on Shanghai, but from basically Q3, Q4 2019, Q2, Q1, Q2 2020, they think they'll be able to build 500,000 cars. So longer term, the growth picture is still on track here. They do confirm that preparations for Model Y have begun at Fremont, and there was a couple new patents that have been going. One about the wiring of the Model Y, it's going to use way less wiring than the Model 3, and then anything in the industry. So I think that's going to be huge. Also, this crazy new like stamping device that's going to stamp the entire car in one piece. I mean, just from going to the factory, the amount of different stamps they had to do and stamping all the parts and assembling them is a huge initial part of the production process. So I think there's a lot of interesting, the pace of innovation of manufacturing for Tesla is really impressive. I think we're really going to see that in the financials when the Model 3 at Shanghai ramps and when the Model Y ramps at Fremont. A huge bright spot during the quarter was Powerwall and Powerpack deployment. 419 megawatt hours, grew 81%. I can't wait to show you the chart of this because that'll really put into context. It's better than the quarter when they installed the Australia project. So the battery utility scale of the business continues to really fire on all cylinders. Solar was basically the opposite, which has been shrinking. Once again, an even worse quarter than the last period. 29 megawatts installed, pretty big sequential decline. But once again, they say we are in the process of improving many aspects of this business to increase deployments. And so I just think the focus on Tesla's solar business hasn't been there, and they're waiting to perfect the solar roof before really pushing that business. So I'm not worried about the decline in solar. And I think the bright spot is that energy and Powerwall business. And moving to the actual financials, I was estimating energy revenue of 425 million. So that came in light. It was 368 million, still growth over the last year. And I think the really encouraging part was we saw the gross margin bounce back to 11.6%, up from 2.4% in Q1 2020. Now I'm just going to go through a couple more things here if there's anything I want to highlight. They also throw in this tidbit that the power walls are now installed at more than 50,000 sites. So I think that's a pretty impressive milestone for Tesla's battery business. In terms of the outlook, they basically say local production and improved, this quarter, we are simplifying our approach to guidance. Thanks for the super chat. Biggest reason for missing expectations. I mean, I love this. I want to talk about this because everyone's always like, oh, Tesla missed earnings estimates. This is what the analyst had. This is what Tesla had. It's like Tesla didn't miss the estimates. The analysts missed reality. I don't read a single analyst report. I don't care what the analysts say. I just look at what the numbers are. So I get that people try and comp the expectations to what the analysts think. I don't know. I just think that's kind of an old school Wall Street thing that I don't pay attention to. I literally just look on the numbers, look at the numbers. And anyway, back to reading about the outlook. So this quarter, we are simplifying our approach to guidance. We are most focused on expanding our manufacturing footprint in new regions, launching new products, and continuing to improve the customer experience while generating and using cash sustainably. So they're really focused on less like manipulating the metrics to show a profit and to show profitability, but really optimizing the business from a cash flow perspective. So I think that's a little bit of a different change for Tesla, but they do say they're still basically guiding to deliver 360 to 400,000 cars this year. They still continue to aim for positive GAAP net income in Q3 and following quarters, although continuous volume growth, capacity expansion, and cash generation will remain the focus. CapEx, the last thing here is they're expected to hit 1.5 to 2 billion in 2019. They've only done about 500 or 600 million through the first two quarters of this year, so CapEx will ramp later in the year. So this is my hot take or first take. I want to just give you guys a live reaction to the Tesla numbers here. Once again, link right below if you want to click and follow along yourselves. My high level is, the ASPs were a little bit worse than I thought. More Model 3s. Maybe I should have seen that coming. Energy business was a little worse than I thought, and that added up to the earnings being about 200 million GAAP income worse than I thought. But still, I think the high level thing that I keep coming back to is over the past 4 quarters, Tesla's produced positive EBIT of about 150 million or so, and they produced positive free cash flow of hundreds of millions. So if you look at not on these lumpy quarters, but on a rolling basis, I think Tesla's business is really improving. Yes, thank you, David, for the super chat saying it's outdated to say Tesla's firing on all cylinders. I don't know why I say that. It's just kind of for fun. But anyway, I don't know. So I think there's not too many surprises in this report. I mean, we knew what the delivery numbers were already. They're basically saying we're on track to continue growing. We're on track to hit our guidance. Tesla Shanghai's on track. The biggest surprise thing that actually surprised me was that the cash was so strong. I would have personally estimated with this type of net income that we would have seen cash generation be a little more neutral. I mean, we did have the 8,000 car overhang of more cars delivered than produced. So if that normalizes, that'll sort of normalize the cash. But they also did, I want to find this tidbit so I don't mess it up, but yeah. Additionally, this is in the outlook part. They say, additionally, we expect positive quarterly free cash flow with possible temporary exceptions, particularly around the launch and ramp of new products. We believe our business has grown to the point of being self-funding. So this is why I'm so much more confident in Tesla than I was a quarter ago, 2 quarters ago, a year ago, because we've seen Model 3 ramp. The demand is there. I mean, and the cash flow situation is strong. They've raised money. They have $5 billion in the bank right now. This is the biggest war chest I can ever remember Tesla having, while simultaneously their business is closer to profitability than ever. And remember, Tesla's still in startup mode. Their deliveries were up 133% year over year. So, yes, I get the focus on profitability, but they're running at break even because they're growing like crazy. And I think once you start doing the mental math of adding in, okay, the Model Y is about to come online. We have the incremental Model 3s from Tesla Shanghai and the Gigafactory there. Then we have the energy storage business, which is exploding. Let's say solar actually does come out of nowhere. I mean, these are all going to start to layer on the income statement and start to make Tesla very, very profitable. And we're already seeing evidence of that, which is why they've gone from, losing hundreds of millions of dollars to quarter to only losing 167 million this quarter. And actually, if you look on a rolling basis, making money. So there was one super chat there that I didn't want to get to that I missed. What are your thoughts on the United Nations IPCC report? I don't actually know. I haven't read that. I didn't know there was a new report out, but I just did a review of Greta Thunberg's book. And so I think that may be related to that. I mean, we need to get off fossil fuels as fast as possible. That's sort of my take on that. But anyway, I mean, I see a lot of people in the comments thinking like this is the end of the world. I think the most important thing to remember with earnings is like, you got to take a step back and look at the business more holistically. Cash deposits declined to 631 million, so no huge pre-sales of the Model 3 in China. I wouldn't read too much into that. There's so much going on with that line item of Tesla of customer deposits. I mean, they still could be going through old Model 3 deposits. So I just think it's hard to read into that. I mean, even if there was 10 or 20,000 pre-orders for Model Y, I don't think we would be able to see something there. But anyway, I'm going to be, if you have any more questions, shoot them. I'll try to answer them right now. But otherwise, I am planning on signing off right now. I'm going to get on the conference call. I'm going to make a ton of charts, and I'm going to make like my normal earnings video that goes through the whole charts, ton of charts lined up, all the financials, and then also going to go through the conference call. So that is coming. So stay tuned for that on the channel. Subscribe if you haven't already. Also, hypercharts.co/TSLA. We've already updated that. Mo has already put in all the results for Tesla. So if you want to start playing around with the financials yourself and you can't wait for my episode, go to hypercharts.co/Tesla. But anyway, this is Hyperchange. Tesla earnings are out. Sure, it was a little bit lower than what I expected, but the cash is super strong. Overall, the company is on track, still extremely bullish. This is Hyperchange. Thank you so much for tuning in. See you soon later tonight with more Tesla earnings info. Peace.